Welcome to the Krinzman Property Playbook, your inside look at South Florida real estate. I'm your host, Matthew Krinzman, bringing you real strategies, real insights, and real connections that help you buy, sell, and invest with confidence. With over 2 decades of experience as a licensed realtor and broker associate, I've watched South Florida grow from a quiet getaway to a global destination, and I'm here to help you navigate it like a pro. My business thrives on trusted relationships, with many of my clients being repeat and referrals. This podcast is brought to you by me, Matthew Krinzman, a Sotheby's International Realty agent. For more info, visit buysellmiamire.com. Let's dive in.
All righty. Good afternoon, good morning, good evening, wherever everyone is listening out to this podcast today. This is the Krinzman Property Playbook. I am your host, Matthew Krinzman. And today I have Nick McGrue, who is an attorney out in California, in Inglewood, which is right next to LA, correct? And Nick has quite the extensive biography here between law school and the practice that you have advising entrepreneurs and those, real estate people who are looking to raise money for their projects. It's quite impressive. And your firm is called Polymath Legal, which, I'll let you tell us a little bit about yourself. I'd like to hear from your own mouth who you are, what you do, your whys and whys and whats and hows and wheres, and all that good stuff. Just kind of let you tell me, and tell the listeners and the viewers out there who Nick is and what you do.
Yeah, thank you. Yeah, as you said, my name is Nick McGrue. On social media, I go by Nick the Lawyer, and I'm the founder of Polymath Legal. At Polymath Legal, we help real estate investors lawfully raise capital so they can create generational wealth and generate passive income.
I like how you stress. I like how you stress lawfully.
Because a lot of people are not doing it lawfully, so I want to make sure that we stress that. Yes.
Unfortunately, true. Yes.
Yeah, so a lot of our clients are either buying or building apartments, office buildings, things like that. And so with that, obviously, there's a lot of capital that you need.
Yes.
And it's not as simple as just saying, hey, I've got a project, do you want to invest? There's lots of laws and regulations involved with that. And so we help them navigate that complex process to raise the capital they need to either buy the project or build the project that they're looking for.
That's awesome. So how did you arrive at the name Polymath? I think some of us are going to be familiar with Poly Markets, which is a site where one can wager on the markets or what's going on in the world by using, it's a blockchain crypto style of online betting. But how did you come up with Polymath?
Yeah, so nothing to do with betting here. Polymath is essentially, it's like a Renaissance person. So somebody who's learned or skilled in many areas. And so years ago, we're celebrating our 15th year in about 2 or 3 weeks.
Congratulations.
Yeah, so years ago when I was thinking about it, I thought of when I started, like I said, I could be the law offices of Nick McGrue, but I'm like, we've heard that or a version of that before. And so I said, I want to do something that's a little bit different, something that stands out, something that's going to make people pause and think a little bit or ask some questions. And so then I just started thinking, and in college, a group of my friends, we called ourselves the Polymath Group. We all were doing various entrepreneurial things. And so we said, yeah, we're the Polymaths. And for myself, I consider myself a bit of a polymath as well. I'm trained in the law, but I'm also a tenured professor. I also play saxophone. I also actually do card magic.
We're going to get into that. Trust me. I saw that. I saw the card magic thing. I will definitely bring that up a little bit later.
So I'm a curious person. I think it also represents our clients now too, because while we do focus on a lot of apartment buyers and developers, we do have diverse clients. Some people are raising capital for laundromats. Some are raising capital to start their tax practice. So our clients come from a wide swath, and then I'm a curious person. And so I figured Polymath, that kind of represents both me and the clients. And it gets people like even yourself to ask, what does that Polymath mean? And now we have a conversation.
That's a good conversation starter.
Talking about my business. Yeah.
Yeah. It's a great conversation starter because were you a very good math student and were you curious about math?
Not at all. Okay. Yeah. And that's people are like, oh, so you're a math person. I'm like, absolutely not. While I am trained in many areas, that's one where I would not say I am an expert by any means.
Interesting. Okay. So you've been in business as a firm, you're in advising your clients for 15 years now. You graduated from Pepperdine for law school, correct?
Yes.
You're a tenured professor as well. What do you professor at? What What are you teaching?
Yeah, so I've taught at graduate schools, law schools, but I currently teach at a local community college. Love it. We have a paralegal studies program there. And so I get to teach the future paralegals what they need to know to work in a law firm.
All right, great. So take us through what you at Polymath do, especially on the capital raising and the legal aspects of it for your clients. There's a lot. I mean, there's numbers here, the 506B, 506C. There's all these different things, and I know some that gets into securities, and you got to walk a fine line sometimes. At least when I'm a real estate agent, they tell us do not talk about financials. You can talk about financials, but you can't guarantee rate of return and things like that. Because we have a lot of these condo hotels that have, you'll earn this, but you can't guarantee it because you get to an SEC filing issue, and so that's a little bit out of the scope. But I would imagine you're more on that side of the advising of raising the funds. Is there any? I suppose there's a bunch of legal ease stuff that you have to be aware of.
Yeah, so a lot of people don't realize that they're often selling securities and the rules that go around it. I tell people kind of the cheat code is if you have a passive investor, so if you're planning to get their money and they just sit back and then collect in the future, then it's likely that you're selling a security. And the law says that if you're selling a security, you either have to register that security or have an exemption from registration. So registration is like IPOs going public, very expensive, very time consuming, and how quickly real estate moves, typically not an option for a lot of my clients. And so the other option is finding an exemption. And so that's where that 506C and lots of other ones come into play. And so we essentially say, okay, you're raising capital, you have passive investors, you're fitting the definition of a security. We know you don't want to register, so let's figure out which exemptions could apply for you, and then let's see which ones are going to be the best to fit your goals and your needs and whatnot.
Interesting. Take me through this. Give me an example of how, say, a real estate investor comes to you, Nick, and to your firm and says, I want to raise money. Take us just a little bit of that process. How does that work?
Yeah. So you come to me and you say, hey, we're going to buy an apartment building. And maybe to buy that apartment building, let's say that it's $5 million and you're going to get financing for maybe 50% is about what you can get right now. And so you're going to need to come up with that other $2.5 million.
Right.
You might have that money, but even if you have it, you might say, hey, I don't want to put all of my money into this.
It's a lot of money.
I want to get some other people to spread this around as well. And so you say, look, Nick, we got to raise $2.5 million. I'm going to put in 0 or 100 or whatever you want to, but I'd still need another couple million that I'm going to need to raise from other people. And so one of the first things I'd say is, okay, who do you think your investors are? And what I mean by that is, number one, are you trying to only get investors from your network? And then number two, what do you think their income levels are? Because that's one of the big areas where the SEC can start making some distinctions.
Yes, I've seen that, yeah.
So there's a concept called accredited investors. Simply put, we're thinking about high income earners or high net worth people. And so if you're talking about an individual, it's somebody who's made $200,000 or more the past 2 years and expects to make that much or more this year. So $200,000 income for individuals, or for spouses, we up that number to $300,000.
To be an accredited investor.
Yeah. And again, you can qualify by income or net worth. So if it's income, it's $200,000 as an individual, $300,000 as a couple. Or if you're doing net worth, is your net worth $1 million or more, excluding your primary residence? So we take your house out of the conversation.
Interesting.
And are your stocks, other investments, maybe you have other properties or bonds and things like that. Does that all add up to $1 million? If so, that's another way to say you're accredited.
Okay.
And so we want to understand whether we think we're going after accredited investors or something else, because that's going to let us know what exemptions can apply. So you mentioned earlier 506C. With 506C, that exemption says, hey, you can sell a security. You can even advertise your security. You can tell the general public. You've just got to make sure that the only people that buy your security are accredited. So those high income or high net worth earners.
So they have to do a KYC then at that point, your client type of
deal.
Yep,
exactly. You do questionnaires and oftentimes get letters from their attorneys or CPAs and things like that to cover that. Yeah. And so you might say, okay, cool. I understand if I'm going after 100% accredited, maybe some of my friends and family want to get involved and maybe not all of them are accredited. What can I do? That's where the other one, 506B, as in boy, comes into play. That one says, okay, you're not going to have to raise from 100% accredited people, but you must have a pre-existing substantial relationship with all of your investors, meaning that you knew them before you were making this offer, and you essentially know what their financial status is, whether they're accredited or not, and the reasons why. And so if you meet that to where, again, you're basically raising just from your network, people that you've known before, and you know their financial position generally, then will allow you to have up to 35 unaccredited investors, plus an unlimited number of accredited investors. But again, you must have that pre-existing relationship with all of them.
Understand. So is this what we're talking about? Is this a syndication of a purchase of a property? Is that what it is?
Exactly. It can be syndications or funds, but yeah, we're pooling capital together. So yeah, that generally falls under the syndication bucket. Exactly.
Gotcha. So you went a little bit about the law, at least on the B and the 506C. Is there any other things as a investor that is available to raise funds or invest in these deals?
Yeah, so there's quite a bit, at least close to a dozen or so exemptions, maybe a little less. Another one that I keep saying it's new, it's over a decade at this point. But the newer kid on the block is Regulation CF, Regulation Crowdfund. So
Crowdfund.
I mentioned,
okay.
Yeah, Crowdfund. So I mentioned before how, if you want to advertise to the public, it's got to be 100% accredited investors. And that's what it was for a long time. Then Reg CF came in the Jobs Act in 2014, and it said, okay, you know what? We're going to set up a new scheme here. We're going to allow you to advertise. We're going to allow you to get money from any investor, whether they're sophisticated and financially savvy or not. But we're just going to make sure you follow this different set of rules. So Reg CF allows you to advertise. It allows you to get accredited investors, unaccredited investors, people you don't know. But there are some limitations around it. So number one, when we're talking about 506B and C, they have no financial caps. So you can raise theoretically $1 billion. Theoretically, there'd be other regulations that come into play.
Sure.
But with that, you could raise a whole bunch of money.
Okay.
With Reg CF, they say, okay, we're going to limit you to $5 million for a 12-month period. So your raise amount's going to be lower. It's not going to be infinite, so to speak. In addition to that, because you're going out and getting all sorts of investors, we are going to put some limits. So everybody can invest, but if they're not accredited, we're going to put a cap on how much they can invest.
Okay, what's the cap?
So a part of it depends on the income, but typically it's, if you're accredited, you can raise as much as you want to. If you're unaccredited, but you make, I believe the number is $124,000, then you can invest the higher of 10% of your net worth or 10% of your income. And then if you make below that number, then it's at 5%.
Are you, say a person like that who has that kind of income, are they limited to how many they can invest in, or is it just one time they can invest in any type of these deals?
So the investor could invest in multiple of them. Just the issuer, the one who's raising that capital, is capped at raising $5 million through that exemption in a year.
I got you. I remember the last few years, I haven't seen it recently, but I would see a lot of advertising for these kind of crowd type of real estate to invest in real estate. It's like, hey, if you $5,000 or $500 or something like that. I don't see them as often now, so I don't know if they're just have been gone away or they're still out there. But I was always curious about them because I was seeing like, okay, they're raising money for this, and I can invest $500 and get some kind of return. It's interesting because it's like you're buying a stock at that point. It's like you're buying a stock. But are many of those still out there, or is that still a popular method to raise capital?
It's still out there. It's still happening, at least anecdotally. I don't think it ever got to the level of 506B or 506C.
Gotcha.
Just because there's a lot less limitations with those ones. The other thing with Reg CF as well, one of the things why we don't do these with clients a lot, and clients often end up not deciding not to, is the issuer is required to use a Reg CF SEC approved portal, especially where the investors can log on and see their investment position and know about the deal and things like that. But it's not like the typical ones. In the syndication world, a lot of people are doing this just to put on a more professional front. But with Reg CF, you are required to do it, and you're required to use there's about 45 of them that have gone through the SEC approval. And so with that, these portals end up being pretty expensive. Most of them charge between $5,000 or $10,000 to get started up.
Okay.
And then they also charge a success fee, which is a percentage of the raise, usually around 5 to 8%. And so you're giving away a lot of potential returns just in the infrastructure right there. And so for a lot of clients, it ends up not making sense, but we do have some clients that we've done this for as well.
Understand. So now we've covered that type of we've covered crowdfunding type of ways. Is there any other creative ways you've seen or been a part of to raise capital for real estate investment?
I'm trying to think of other exemptions. If you have a completely foreign investors, you
Yes,
can do
there's
Regulation
yeah.
S. And so that lowers, with Regulation S, the SEC doesn't care about accredited or unaccredited. They just say you can't advertise to U.S. citizens or U.S. residents, and all your investors have to be offshore. So it's a much more streamlined. So I do have some clients that have strong networks offshore. And so that's a pretty streamlined and simple exemption that they can use. Another one, this one came out around the time of Reg CF, is Regulation A. This one we often refer to as the baby IPO, because while you're not going public, it's very close.
Yeah.
You are getting your initial documents, so you're going to have a big disclosure document. We often call that a private placement memorandum, or PPM. So you'll have that, and you'll have all your other documentation, and then you're actually going to submit that to the SEC, and they're going to review it and give notes back and whatnot, similar to what you do if you're going public as well. But with Regulation A, there's 2 tiers, but you're able to raise between up to $25,000 or even up to $75,000 in a 12-month period. And so it allows you to raise quite a bit. And I have clients that have raised more than that, but typically not a whole lot more than that in a year. And so that covers what a lot of people would need. But again, we call it the baby IPO because there are lots of regulatory requirements. For instance, you're going to have audited financials, and you're going to have certain disclosures that you got to make annually. So it's not quite as intensive as a fully publicly traded company, but it's inching closer towards that.
What would be the benefit to that for someone who's raising? Why would they go through that? Seems like a lot of work to get for that.
Yeah, and to be candid with you, this is another one where with Reg CF, we do these a little bit. Regulation A, every time I've walked a client through, they're like, yeah, I don't think I want to do this, because it is quite a lot of work to do. I'd say the benefit is if you are looking to raise a whole lot of capital and you are wanting to do public advertising, but you don't want to go public, then it might be beneficial. But even with that, you've got to make sure that you have a deal that you actually can raise that 25 or 75, because I see a lot of people that say, yeah, we're going to raise 50 million, and they end up raising 5 or 10. So now you've gone through all of this work that you didn't really need to go.
It's a lot of work for nothing, almost, it seems like, in some cases.
Yeah, so with my clients, I haven't yet found a use case where I said, okay, this is the one. Usually I'm like, we could do this, but we've got these other options that are a little easier, probably a little bit more cost effective, and can probably ultimately get you where you need to be still.
Just out of curiosity, have you dealt with or are you seen any use case for tokenization of real estate for raising capital?
I've dealt with it on the fringe. I think that the blockchain is a great tool for real estate, and I cannot wait until the industry gets around it.
Yeah.
Because essentially it's an escrow company. That's how I look at it. And so I think the blockchain is great for real estate, could streamline a lot of the operations. And tokenization is, I've worked with clients that were tinkering on that. Tokenization, you would still do the 506B or 506C or have the security exemptions.
Yeah.
Tokenization is just how you're transferring that.
Understand. In commercial real estate transactions, anything that is easier or more difficult when you're raising the capital, or is it just all the same? And also, what are you seeing more in the commercial real estate? Are you multifamily, or is it office space, or industrial? What are your clientele?
Yeah, we've done a mix of all of that, but primarily multifamily is what most of my clients do. I'd say for what we do is multifamily acquisition, followed by multifamily development, followed by residential development.
Okay.
That's what we do.
So you're saying more in it's more the residential side of business. You're operating more in the multifamily and the residential side of the transactions.
Not a lot of office.
Well, office is difficult right now, I would say. Yeah. Depends on it. Look, it depends on also location, obviously. South Florida offices, for the most part, is doing halfway decently still, especially if it's a Class A type of property building. I mean, you get the lower, you get the B's and the C's, they're struggling.
Yeah.
But it also depends on the neighbor where you are. If you're in downtown Miami, Brickell, or you're in Fort Lauderdale or Palm Beach, there is demand. You're seeing it. Has to be Class A for anyone to really make a move on. What are so you have the syndicators. Is there a difference when you do the syndication of doing a general partnership or a limited partnership or a joint venture, JV type of deals? Are they all the same?
So those are some of the tools that we use to set up the syndication, but the syndication part itself is really referring to the security side of it, making sure that you're compliant. And so you could do it. We typically use LLCs, but you could do it through a limited partnership or do joint ventures and things like that. But those are more the tools that we use with the structure.
Gotcha. Okay. What legal mistakes or pitfalls should they be avoiding, or are you helping them avoid in the process?
Yeah, so I'd say the biggest one that a lot of people run into initially is not realizing they're selling a security. They might, especially let's say it's a smaller project, maybe it's a 10-unit apartment, so it's not millions of dollars in most cases.
Right.
So they might say, yeah, I've got a couple of friends and maybe a couple of people at work, and there's 10 of us together, and we're going to buy this. And I say, okay, are you voting on all the decisions or what's going on? They say, no, I'm taking all the money, I'm running the show and everything, but we're all doing it together. And I say, it sounds like you're selling a security. And so I'd say the biggest one is not understanding that you're selling a security. And then I'd follow that with, if you are selling a security, not understanding that there's rules and laws around this, and it's more than just a promissory note. Gotcha. I've had people come to me and say, yeah, we got promissory notes, so we're all good to go. And I say, that in most cases, you're not going to be all good to go there.
So it's just not as simple as me. Hey, Nick, I got this $5 million multifamily property here in Miami that I want to raise the funds for. I'm going to be the general partner, I guess the general partner of the deal. Yeah. And then I'm going to have limited partners, and I'm going to have full control of it. And just get me $4 million because I have the $1 million in cash. We have that equity. We just need to raise the rest. That doesn't sound right. That's not the right to do it, correct?
Correct.
Okay.
Correct.
Don't do it that way. Make sure you have all your I's dotted and all your T's crossed, and have a good legal mind or a legal professional to advise and how to create the documents. Really, you're creating an entity. Yep. However that entity is created and how it's governed, it just is dependent on. It really sounds like you need to have that all structured to be legal and to be on the right side of, I guess, the SEC in some ways if they ever decide to come knocking at your door, or just to keep you out of trouble and jeopardy. The jackpot. One of my brothers would say, just want to stay out of the jackpot.
Yeah.
You want to make sure you're clear. There's these type of deals, you can get into disputes. And I'm sure that's a great way to blow up a deal and blow up the partnerships or the JVs or the syndications. How do you navigate that? If I were an investor, how would I navigate those pitfalls?
Yeah, so that's a part of what a lot of the documentation is for. The SEC requires the PPM, that disclosure document. And from their viewpoint, I'm sure they say, yeah, we require this so that the investors can be apprised of certain information, which I agree, and that's important so they can make an informed decision. I tell my clients, I'm like, yes, the SEC requires this, and they think it's protecting the investors. But I'm like, I also think it's protecting you, because in that document, we're going to think about what are some potential issues. And even when we do this, we have clients fill out a big questionnaire. And one of the last ones is, what are the things that are keeping you up at night? What are the things that you're scared about? So that we can make sure that we've given the right disclosures about that. And so a lot of times a well-drafted PPM, it can't prevent any issues.
Of course.
But it hopefully will predict a lot of potential issues and tell you how you're going to resolve it. Right. So there's been many times where a client says, an investor's saying this or an investor's saying that. And I say, tell them to look at section blah, blah, blah. And their initial right next to that section, and have them help you understand why they're still trying to pursue this. Because essentially we're saying, hey, we warned you about this. You also told us that you read this and you were accepting this. And we get it. We do not want bad things. And we're going to try to work to right this ship. But you also knew that hopping on this ship, there was a chance that it might sink. So we're doing our best right now to bail the water so that it doesn't. But you signed up for this, and we apprised you of all the information you needed to up front.
That's why you have someone, a legal team to help you navigate that. I can see usually the biggest argument or source for conflict is money. Then, hey, where's my money? Where's my money? Where's my money? Where I have not seen my return. You promised me this return. I gave you $100,000 of my hard-earned money, and you promised there was a 10% return supposed to be on this. I haven't seen dime one yet, or a disbursement from these. So I guess that would probably be, in my mind, would be the biggest pit that could arise.
Absolutely. A lot of times it's set up to where you'll get distributions throughout the holding period, and you're looking for a big windfall at the end. And one of the things that my clients don't like that I put in there, but I always put in multiple places, and in a couple places it's bolded, it says, you may lose all of your money. Because that's true. We don't want that to happen. And my clients are going to work hard for it not to. But it says you may lose all your money. Distributions are not guaranteed. If you want to invest, come on and invest. And so when they come in and have those issues saying, where's my preferred return? Where's my distributions? I tell the client, point them to that bolded part that, again, they initial next to that says distributions are not guaranteed. And again, say, we're working on it. here's what we're doing to fix it. One thing I also tell clients a lot is I say communicate regularly, communicate often, even if the news is there's no news, because you want to get ahead. Usually as an operator, you can see 6 months ahead where you're like, ooh, things might get a little dicey.
You can see the vacancies coming up and things like that. Or just the cost of maintaining maintain the property. Hey, we have to replace refrigerators. We know we had an unforeseen expenditure. We had a roof leak, things like that could eat into, obviously, the profits. And unfortunately, that's just the pitfall of owning real estate. It's just like anything. Look, you also can you can go invest, take $100,000 and throw it into the stock market. And one day your stock is up 100%. And the next day it's down. You lost it all. Zero. The company went out of business, whatever it is. But yeah, just like in playing the stock market, there is obviously risk involved when you're investing in real estate. Look, at the end of the day, real estate is probably a more stable investment because you know where the property is at all times. Yeah. So look, if worst comes to worst, you have to liquidate. At least hopefully you can get what you put in to it originally, or if not, at least get something back to cover. You may not be whole, but that's, again, you talked about risk, but you could at least get something back. Obviously, ideally, when you invest, you want to make the money, you want to come out ahead. But like you said, there's these unforeseen, they're not unforeseen because you've seen them. You're getting ahead of it in the contracts. It happens, unfortunately. Most of the time, look, real estate has been stable. Real estate is a great investment, and it has returned over the centuries of people in buying and selling and investing in real estate. Has proven the best return on any investment over the long haul and the long term of history of the world. It used to be that the most millionaires and billionaires were made because they were in real estate. Maybe not today. I don't know. Maybe there's obviously we have so many other ways because of AI and all these great companies that are coming up, but still, those companies have to operate out of real estate. They own real estate themselves. But Walmart, we talk about companies like McDonald's. Yeah, they make money on the franchise, but their money is in the real estate. And that's what Ray Kroc originally said. We are a real estate company at the end of the day. Walmart, the same thing. Even Sears went out of business and Kmart went out of business. But guess what? They're still making money because they're selling their real estate because they were smart enough to own the real estate that they built their stores on. And the real estate is worth billions now. And it's the same thing with McDonald's, Walmart. They all own their real estate. Yeah. So, yeah, there's obviously risk, but there's always, I think, it's the return or at least the stability is there on the real estate side. Just out of curiosity, can you talk about any of your recent deals that you put together, or just give us an idea, something that you've recently worked on that you helped for a syndicator?
Yeah, so a recent thing that we did, we worked with a client. They're not house flippers, they are land flippers. And
interesting.
So they have a good beat. I don't know their exact process, but they are able to find pieces of raw land and they buy them, and then they turn around and they have a pipeline of buyers and turn around and sell them usually within 30 to 60 days.
Interesting.
And we created a fund for them because they said basically, hey, we need basically a line of credit to finance these properties, but we're not holding them that long. And so they're like, yeah, so we're just going to write a promissory note and have somebody invest. And I said, that's not quite going to work because especially how their model, they're not able to put a lien on the property, which can sometimes be an exemption.
Sure.
And so I said, yeah, we're going to need to set up some sort of securities offering for you to do this. And so we basically set up a fund that explains their general model and says how they rotate the properties in. And now they have a securities vehicle set up to where they can raise capital continuously to fund provide short-term funding for their land flipping.
So someone as an investor, like myself, I could come and say, oh, that sounds like a great idea. I love that. Here's $100,000. As they're buying the properties, they're using those funds, obviously, and then they're selling them within 30, 60 days, or whatever profits after expenses, they're putting that back into the pot. Is that what they're doing? And then
and then
doing
in
disbursements?
The fund, the fund we'd allocate, how that money is going to be shared once the properties are sold.
Understood. Okay. And I can leave my investment in there to keep it going and say, hey, as an investor in these type of deals, could I add more to a fund like that other than my initial investment? Am I allowed to add more to it?
There's no legal, in most cases, it wouldn't be a legal thing against it.
Okay.
Depending on the exemptions, there might be, but generally wouldn't be no legal rules against it. And assuming that the operator needed more funds, then yes. Now, if they don't need it, they're going to say, yeah, we don't need your capital and don't want to start racking up the time to pay you back. But yeah, if they're looking for more capital, then we've had many clients that do that, where they have many repeat investors in the same deal, and also if they have additional deals.
Sure. Because they had a track record. If you have a good track record, you're going to have investors who are going to stick with you. Is there ever a possibility, or all these exemptions and these rules in place, are they to prevent someone from overselling an investment or a fund or a syndication to buy into? Is there ever a risk of overselling it, or are they just limited and there's no possibility of that happening?
So there is, if you're saying that is there a risk of them kind of raising more capital than they need?
Yeah,
but it's a risk that they're 100% in control. And one of the things we put in the documents as well is that even if you fill all this out, the manager has discretion to deny any investments. So if there does come a situation where they're maybe raising their last $200,000 and 3 people say each, I've got 100, they'd have the ability to deny one or just say, hey, we'll let each of you in at whatever the 70,000 or whatever the math is on that.
Great.
To let all 3 of them in.
Okay, great. So talk about the magic. You put it in there. You told us about it. Now you got to tell us a little bit more. What's the story on that?
Yeah, so in LA, there's a place called the Magic Castle.
I have heard of that,
and
yes.
My first 10 years, you have to be invited by basically a member of it. And so my first 10 years, I'd been hearing about this, and because the Magic's cool. Like, it's pretty cool. It's fun to watch. And so I'd been hearing, I'm like, man, it'd be so cool if I knew somebody. It'd be so cool. And then there was one year where I had a friend that somehow had some connection, so we were able to go, and I was like, this is amazing. And then 3 months later, I had another friend that had a connection. I was like, oh, man, This is amazing again. And then I had another friend whose coworker was an actual member, and so we went with him and went a couple times. I was like, this is so cool. And my girlfriend at the time just saw how much I lit up when I was watching the Magic. And so for my birthday, she got me a Magic lesson with one of the professors at the Magic Castle.
Oh, wow.
And so I took the lesson and I loved it, but now I was behind the curtain because you start seeing how they do stuff.
Okay, can't reveal it. Never reveal the magicians.
Absolutely not. Absolutely not. But I was like, I'm behind the curtain now, but it's cool because I think I appreciate Magic even more because I can appreciate the artistry and the skill. Because I'm like, I know how they did that, but I'm like, that's still super hard to do, and I'm like, I can't do that. Or I'll be thinking, I'm like, I wonder what method they use. Either way, it was super smooth, and I can't tell. But yeah, once I started learning more, I was like, now either Magic is just ruined for me. I just got to really learn more and really appreciate it a lot more.
Are you doing any magic tricks? Are you able to at least perform, someone say, hey, Nick, you're at a party or something. Here's a deck of cards. Do your thing.
I do occasionally. And then also when I'm teaching, occasionally, if it makes sense, I'll incorporate a magic trick into the lesson to help illustrate the principle.
Cool.
So it's going back to that polymath, just learning and being curious and then pulling it out when it's helpful and needed.
Awesome. I love that. That's a great story. And you lit up when you talked about it. So obviously it's something that you're very passionate about and very much
a lot of fun,
appreciate. But it was to wrap this all up. Just give us the quick bullet points, how that bullet points to summarize this, and then how someone can get in touch with you. Nick the Lawyer, I guess that's your Instagram. I'm assuming that's your Instagram handle. Yes. So that's already easy, guys. It's Instagram. It's at Nick the Lawyer.
Yeah, so I'd say the quick summary is if you're raising capital from passive investors, it's likely that you're selling a security, which means you need to register or have an exemption. If you don't do either of those, you can get into a lot of trouble. So make sure that if you are doing that you talk with somebody that can help you navigate and walk through that whole process. And then how to reach me, as you said, at Nick the Lawyer on Instagram and TikTok. Then we also do a free monthly webinar called Nick's Law Lessons. So if you go to nickslawlessons.com, you can sign up for that there. Again, it's free for the first 100 people. And then the firm is Polymath Legal, so POLYMATHLEGAL.com. And on there, if you're thinking about offering security, you can message us, you can schedule with me for a free 15-minute consultation, or also our phone numbers on there as well.
Awesome. And you're also on LinkedIn. Is it Nicholas McGrue or is it Nick McGrue?
I think it's Nicholas McGrue on LinkedIn.
So you got formal on Nickelodeon. I was going to say Nickelodeon, but on LinkedIn, you're you're formal. You want to be all business, your proper business. I got you. All right, look, Nick, it was very insightful for me because, like I said, this was something I don't know about, but I have little bits and pieces I've heard, and I've from friends and family and other investors, people that I know in the business, have talked about it. So this was helpful for me, at least, helping understand it. I hope everyone who's watching the Krinzman Property Playbook got a lot from learning from Nick the Lawyer, Nick McGrue, about syndications, about raising capital for real estate investors, and always really. The most important thing is you want a good legal advice when you're doing this, and you want to be on the right side of the law. And like you said earlier in the beginning, raising capital legally.
Yes.
All right. So everyone who you listen to this and watch this today, please hit subscribe, leave a comment, let us know what you thought about this, and please follow Nick online and all the social medias that he has. And maybe he'll be performing at Las Vegas sometime soon, doing magic as well, which would be very cool. To say, hey, I had Nick McGrue on here, who's now one of the most famous magicians and attorneys in America. Again, I'm Matthew Krinzman. This is the Krinzman Property Playbook. Thanks for joining us today.
That's it for today's episode of the Krinzman Property Playbook. I hope you've gained some valuable insights and feel inspired to take your next steps in the real estate game. If you're ready to make a move or need expert guidance, let's connect. Whether you're buying, selling, or looking to invest, I'm here to help you navigate the South Florida market with confidence. You can reach out to me directly through my website or on social media. Let's get the conversation started and make your real estate goals a reality. Thanks for tuning in, and I'll see you next time on the Krinzman Property Playbook.